Hey guys, it's Informative Traders here. Recently I've put an article on the website about market phase, and I'm going to do a video on it to accompany that article. As you can see here, we've got the US dollar Japanese yen weekly chart, and I want to go over the different phases in the market. A lot of newer traders come into the market, they may be impatient, ill-disciplined, and they look to trade the intraday charts, and they just want to get into the market. You know, they've got that, they feel the need to get in early and start making money. So if we take a longer term view of the market, we look at our pairs, we take up a weekly chart, we can see which phase the market's in. You can see in this weekly chart here of the US dollar yen, we've had three areas of markdown. We've seen a redistribution phase where there's been further selling. And we've had an accumulation phase at the bottom, and now we've started a markup phase. So we need to identify what phase the market is in before we even start trading on the shorter time frames. One thing you'll notice in this chart, that as the price moves down, the volume has been quite average. You know, there's no big spikes in the volume. It's just slowly sold off over those several years, and now the volume has really picked up at the bottom here, where the pair or currency is acquired again. So they're really buying in here at the bottom. You'll see there I've got the volume creates a U shape as heavy buying comes into the market. The balance has now shifted from the weak holders to the strong holders. The supply dries up as we retest, and then we see an expansion of volume as the price breaks higher and is marked up. Now that's very important to see those sort of signals. So the smart money has offloaded their holdings at the top of the market. They've pushed price down. It's been marked down over several years and several phases, and now they're ready to pick up a whole lot more and mark it up. Okay, if we dissect this a little further, we look at this first leg down. Once the distribution phase was over at the top left there, and we started to break lower, we needed to be looking for shorts. Now the best place to look is once this first leg has been completed and starts to retrace back up, we need to be looking at that area halfway back, or that 50% of the fib. And you can see here on the weekly, we got back to that 50%, and then price started to move lower again. These are the entries we need to be looking for. We've identified that price has broken lower. It started the markdown phase. We need to be thinking short. We don't want to take any longs against the trend in this area. And we got a perfect retracement back here to the 50%. Here we see the second leg down. So once we got the turn at the 50% mark on the first leg, we've started the second leg down. We take out the low of the first leg and we fall hard. Now, as we see it turn at the bottom again and start to retrace back, once again, we're looking for the 50% area. Now, in this case, we got through the 50. We got to the 61.8% retrace, but it couldn't get any further past it. It couldn't get any higher. So once again, we've seen the weakness come in at that level, and price starts to move lower again. So this is how the market repeats itself. It moves in cycles. We see the first leg come down, retraces halfway. The second leg comes down, we get just beyond halfway. Now price starts to move lower again. So after the second leg down, we actually form a redistribution phase of the market. Now as price came down this second leg and we made a low here, and we started to retrace, we actually had a retest of that low, and it did hold. The support held. Then we had our move up to the reaction high. Now as price was marked down again, we saw another supporting of the market at this level, and that's the key. That's where we start to realize that this price is moving sideways. We're in a redistribution area, but then as it comes back up to retest the reaction low, we can see here that we're struggling to get past it. And that's your sign in the market that we're looking to start the third leg down. The smart money are not allowing the price to get any higher than this level now. And we should see a third and final leg take place. What's very important about this redistribution phase is at times it can mislead the public into believing we've seen a bottom, we've got major support. We've got three areas here. The price has come down and touched this area and it's been supported by the market. Now, a lot of traders, beginners, will get in and buy these rallies thinking they're buying the bottom, but they're actually buying into the rally, and the smart money are selling into these rallies at these areas. And the balance is being transferred back to weak holders. So as soon as we fall here and start this markdown phase, we've got a lot of traders are going to have to cover, and they're going to have to sell their positions, which adds to this final markdown. Now, the key is here, when we couldn't get past that line, we knew that the big players weren't buying into this. Otherwise, we would have come back up and retested this area. When it failed, we knew that this is a redistribution area and that price was headed lower. Okay, the third and final markdown, it's pretty simple. We come down just like the first two, and we get that retracement back to 50%. That's three. This has happened 3 times in this large move down. You've had 3 great areas. Now, one thing we do notice here is there's a big shakeout bar at the bottom here on big volume. You can see the volume has started to really ramp up as we've got down to this bottom area. That's your first sign that accumulation is starting to occur. We've seen a first big buy up by the smart money. So the next phase is the accumulation phase. Now, I've taken this down to a daily chart because I want to explain it a little more detailed. The first thing you can see here is we have a shakeout. Now, on my trade guide plugin, these give great descriptions of what's happening in the market. We've got a shakeout here. It's a markdown on a widespread bar closing near at the high. That'll shake out the weak holders. And if volume is ultra high, this can be climactic action at the start of accumulation. So this is the first real sign we may have hit the bottom. We get the shakeout on high volume, and it's an attempt to shake out all those weak holders, and now the transfer to strong holders. And the volumes, the largest we've seen in years. So we know that something has gone on at this area. Now, because this volume is very high, they're going to have to come down and test this volume and see if there's any more selling down at this area. And as you can see here, this area on the bottom here of the bottom of the shakeout, price is support at this level, and the volume is slowly decreasing, so it's showing that the supply is drying up. Each time we've come down, we're seeing a decrease in the volume. So the smart money are accumulating down at these levels, and each time they test it, they notice that the supply is drying up. Once that supply dries up, they know that they can mark it up. So price rallies again. And as it comes down here, over on the right-hand side again, we notice this time that we can't actually get down to that lower level, the low of that shakeout bar. We can't get down there. The price is being held up off that level, and also the volumes are very low. So there's no supply around. Once they know that there's no supply around, they can start to mark it up. And as you can see here, price breaks through the accumulation zone and takes off. And the best uptrends or markups will just take off. So on the daily here, you didn't even get a retest of the breakout level. It just took off. Another point of importance with accumulation is that the bigger the cause, the bigger the effect. So the longer that we go sideways and the smart money push the price up and down to accumulate holdings, the longer that goes on for, the bigger the move we are going to see. So it's very interesting to note that if you can identify areas of the chart where accumulation is happening and we see a long base being created, once it does break, we will see a long rally. So we're back to the weekly here. We've broken out of that accumulation range and we've marked up. Now we've seen a pretty dramatic first leg up here after the accumulation, which was expected. But it's interesting at this point we are here at the 50% retracement of the first initial large down move. So do we see now a retracement here? Like we saw on the individual legs down, on the down move, we saw retracements of 50%. We're now at a 50% retracement here of that large down move. And also volume has increased significantly as we've hit this level. So I would expect now that we would see some sort of retracement, probably 50% retracement of this current up move, and there could be possibilities of more accumulation. Okay, so if we were to retrace here, we would be looking for that retrace back to the 50% level or halfway back of this move up. Now this would create this grayed out box. Now it's actually interesting that where these two levels are, the level where we currently are and the level where the 50% retracement would be, if we look over here, it's actually the mirror image of where we redistributed on the way down. Now, is there a possibility that we will reaccumulate in this area? Price will be moved up and down, more acquired, and then another markup phase. These are things that we have to be aware of. And if we did see a retrace, this would be a great area for going long on the long term. We've got all this buying in the background, accumulation. We've seen a nice base, so we know that we are going to see some sort of decent move. So if we were to get the 50% retracements here, they would be excellent areas to go long. This is how we have to approach the market. We have to be patient and we have to know where good long entries are, the possibilities. We obviously the market can do anything. We could break out now and keep moving higher. But these are the things that we keep in our mind and we look for. If we get that retrace, I know that around the 50 or 61%, I should be looking for signals to go long. And that's something that I will monitor. So that was a great in-depth look at the US dollar Japanese yen weekly and the cycle of price. We saw the markdown, how markdown and redistribution create the large down move. We've seen accumulation at the bottom. We've now seen our markup phase. So we know where the market is at currently, and now we just observe what happens at this halfway back of this down move. What do we see here? Does price stall? Do we start getting some retraces and retests? Is there more accumulation? Once we know that, we can start to trade accordingly. One interesting point here, on my trade guide plugin, you can see the trend system for the very most part was red all the way down, and for those longer term traders, you could have taken a small position short at the top here, and if you'd have kept your stop, behind the 61% retracement the whole time as we had these markdowns, you could have seen some very, very good profits. The one thing to know is that if we do have a longer stop, we've obviously got to trade smaller positions. But that would have been a very good trade short. Obviously you could have been shorting on the lower time frames each time we had these retracements. Took your profits and got back in as the market moved down. Now in the next video I'm going to show you how we could have traded this markup phase out of the accumulation and be sitting on good profits. I hope you've enjoyed the cycle of price and look forward to more great videos in the future. Cheers, guys.